gearing up for perhaps a battle there, but also gearing up is investors for tomorrow as Infosys gets set to report their Q1 numbers after a worrisome fourth quarter. Some indications seem to suggest that depreciation in the rupee could mean better quarter for the tech giant, but how exactly will those numbers stack up? We get you the best market estimates.
The bears might have taken hold of equity markets, but technology stocks managed to stay away from bear fever. As the rupee slipped in the last few months, the scope of profits rose for IT majors. Add to that tax benefits that were restored for one more year for Infosys, Wipro and the like. So tomorrow, when these CEOs declare results for Infosys and expectations are positive, brokerages see revenues to rise 7.5% to 4,881 crore rupees quarter on quarter. And profits are likely to remain flat at 1,252 crore rupees. However, EBITDA margins are seen improving 2.2% to 1,510 crore rupees on a sequential basis.
We are expecting a 32% increase on a YOY basis for EBITDA growth for the entire sector as a whole, and something like 11-12% from our profit after tax perspective. And we are awaiting what could be the Q2 number that Infosys is going to guide towards, and whether there's going to be some kind of upward revision to the dollar guidance, because the Q1 number is going to be impacted from a rupee perspective because of the depreciation that we've seen, and because of the fact that some companies, say Infosys for instance, has had lower hedges compared to some of the others in the industry.
But the three things to watch out for are management revision of FY09 earnings guidance due to rupee depreciation. Second, the big ticket announcement and billing rate picture in light of slowing US economy. And third, the expected margin hit of about 250 to 300 basis points from rising salary and visa cost.
But as a sector, we particularly like large cap IT companies where the headwinds are going to pass away. And second, we've seen the more tough business climate. We've seen more outsourcing and more offshoring happening by the IT companies, and that's why we're particularly okay on the IT companies, because there's a good set of visibility of 15 to 18% growth more or less across the large cap companies, and the multiples are also quite reasonable. Typically, if you look at 2-3 years back when the IT companies used to trade at 18 and 20 time multiples, today the good large cap companies are available at 13 and 14 time multiples. So again, that is there in the valuation. So that's why we like that space.
Markets are keeping their fingers crossed, as Infosys management is known for surprising markets. With Vishwajit Barua, Saurabh Chakravarti for NDTV.